Hey everybody, I'm Ryan Mallory and we're going to go through some growth stocks. We're going to go through tech and FANG stocks, whole bunches of charts to go through here, and we're going to go through each one of them individually, how I would play them, whether I would play them, and I'm going to tell you about my stop losses and my entries as well for each of them. First up, Facebook, FB, incredible rally here off of the March 23rd lows. This thing is in a very nice rising channel. However, it's in the middle of the channel, so there's no support that it's bouncing off of yet. It looked like it might go back down, and it still may, but I would wait for a pullback to this 214, 215 level, and then put a stop loss below the previous lows, which would be just below 200, and let it ride. Now, how about Amazon? AMZN it. It's sideways for about the past month here. Yes, I know a lot of people get scared because it's a $2,400 stock, but if you can't afford it, there's a lot of sites now that are offering fractional shares, so you can get in on that action. However, hasn't really moved much over the past month. If it can push through some of this rising resistance here in the short term around 25.20, it could become a buy again, see an expansion to around 3,000, 3,200. I would put my stop loss below the previous lows, which would be a break below the consolidation. Even though there's a trade setup here, I'm not sure the risk reward is the best in Amazon right now. And if people start going back to work and they're going to the bars and they're going to stores now, they may have less of a reliance on Amazon going forward, so you may see a depreciation price. So I'm not sure it's the best trade setup right now. Another one is Aapl, AAPL. I'm not sure the risk reward is ideal at this level here. You have consolidation over the last 2 weeks. You could even say that's an ascending triangle pattern. However, it really needs to push through that 328 level to get the engine started on this one again. Incredible bounce off of the March lows that took it right back up to its all-time highs almost. Now it's consolidating. However, I'd wait for it to push above the all-time highs. Not the most ideal trade setup because, again, like Amazon, I'm not sure there's a good risk reward there. However, if you're going to trade it, I'd put the stop loss below 300, which would be around the May 15th lows, maybe like 299.50 with a breakout around 328. That's like a 10% stop loss, right? Almost. However, I'm not sure that's the kind of stop loss you want to be using on a stock like Apple that's this big of a company that is starting to go more towards the value side than it is growth. With that said, in order to get a 2-to-1 reward to risk return on it, you're going to need it to go up to 400. I'm not sure that's happening anytime soon. Netflix has pulled back 6 days in a row. It kind of looks like it may have a double top going here, which it could still be fulfilled if we see some market weakness. However, there is a little bit of a bounce off of support there. I do like that. There was some good solid volume that came in. I think this could be a bounce in the days ahead. Could see 450 in the very near term. Breaks above the all-time highs, then it's probably on to 500. Ideal stop loss is going to need to be below the April 29th lows. Google, GOOGL, or you can do its counterpart, GOOG. I'm not really sure I like this stock. It almost has like a slight bearish wedge going on here. It hasn't showed the same enthusiasm perhaps as like an Amazon or some of the cloud stocks out there or Microsoft. I'm not sure there's a really good clear trade setup here. I'm not sure where you'd want to get in at. There is a gap that's unfilled. However, I just don't see it. I think if you're playing it for anything, you're playing it for back to all-time highs, and there's not really a risk-reward trade setup there that's worth taking. Take a look at Nvidia, again, another tech stock that's trading at its all-time highs. I don't see a trade setup here. I think you're better off looking for a pullback. There's not really a clear support level to get long at, so maybe the play here is to wait for it to pull back to this long-term trend line coming off of the June lows of last year. It comes back to that level like it did back in March of this year. Then you may have a good entry level to jump on. I'm not saying that's going to go all the way back there, and I know that probably ticks off a lot of people, but listen, it could, and if it does, that's where you want to pounce on Nvidia at. If you're not crazy about the Nvidia chart like myself, take a look at AMD, Advanced Micro Devices. There's a breakout play here. If it can break above the declining trend line at around 57, put a stop loss below the 513 lows at around 5160-ish, then you have a potential for this thing go from 57 to possibly 70 in the coming weeks and months if this market wants to hold up and continue to rally. If you want something more exciting, a little bit more aggressive, check out SQ. There is a huge declining trend line going all the way back to 2018. Break that declining trend line and you may see an even bigger expansion of price in this particular stock. Am I crazy about buying it here as it was back in the 30s just a couple months ago and now it's in the 80s? No, I'd rather for it to see a pullback, maybe into the 60s, consolidate some, and then try to make that push towards the declining trend line for that ultimate breakout. Once it does do that, you're going to want to find some consolidation nearby. I wouldn't go more than 10% of a stop loss on this trade. Yes, it could go up 20, 30%. However, I wouldn't go more than 10% on my stop loss. So you're going to want to look for some consolidation. Put your stop loss below that short-term consolidation level, and then let's see if the stock can ride up without violating that stop loss. Intel Corp, INTC, another semiconductor stock. Box consolidation, not a lot of those out there right now, but this INTC one has a really nice look to it. broke out of it, hasn't really broken big to the upside yet, so there is a opportunity here to get long now. Put your stop loss maybe below like $60, $59 and see if it can't get up to $70, $75 in the near term. Adobe, I'm gonna take a hard pass on this one. Look, I've traded Adobe a lot. I like it, ADBE. However, this thing looks everything like a bearish wedge to me. I don't like this chart. I don't like the look of it. It's possible that in conjunction with this bearish wedge that we have a double top form here too, and it comes back down, especially if the rotation out of tech continues like we've seen a little bit of in the past couple days. If that happens, then I want to see it pull back to this huge support level here, going all the way back to early 2019. That support level hits, you'd have a entry around 271, 272. Yes, it's a long ways off. May not see that for years to come if this market can hold it together. However, if that does happen, that's where I'm looking to get into Adobe long at. AMAT has intrigued me in the past couple days. You have this ascending triangle breakout that was formed off of the March lows. It's broken out of it above the 200-day moving average, as well as all of the other significant moving averages. Has a lot of room to run before it gets up to its previous all-time highs at around 70. So I think you can trade it here, get long on it, especially if it breaks above 57.02. Does that, then you can get long and then put a stop loss below 53.20. Once you're in the trade, look for a price target of around 70 to book your gains at. Guys, Zoom, it's a crowd chaser. Everybody's jumping into it. They were one of the most hyped stocks of 2020. I'm not a really big fan of it yet to trade it. I've contemplated a few times. You do have a rising trend line here still intact. If you still believe in this story, if you believe that the coronavirus, and it very well could, will start spiking again, we'll have to shut down the economy as well, then you could have an entry here at the rising trend line. Also, you want to watch the 50-day moving average. There's a lot of support there. That's been where the stock has wanted to bounce a lot at in the past. If it breaks and closes below the 50-day moving average, that's your reason to get out of the trade. TTWO, very popular stock. Huge pullback in recent days. Solid bounce here so far. I still think this stock is in play. That video games are not going anywhere, okay? If anything, people are probably more addicted to them now than they were before the COVID crisis. So check it out. There's a support level here. It's holding it. As long as it holds that support level and doesn't close below it, I think it remains a buy. And come on, you didn't think I was going to do a video without talking about Microsoft, did you? Check this thing out. Possible double top. Kind of looks familiar to like what we've seen in some of these other trades with software stocks. It's a short-term double top, hasn't confirmed yet. And so as long as it doesn't break below last week's lows, this thing's still in play. It's got some consolidation here over the last month or two. Break above that, it's going to take out its all-time highs. I would probably say like Aapl and some of these other plays where Google, Alphabet, there's not a lot of reward to the amount that you're going to have to risk on these trades. I just don't see a lot of upside to it, right? I mean, sure, it can break out to all-time highs, but then how high does it go? Is it going to go to 200? Is it going to go to 250? I don't know. But at that point, the market's going to be pretty overbought, and there's probably going to be another crisis that's been manufactured to drive the market lower, right? I mean, that's all we ever see. We have trade wars. We have North Korea. There's always going to be something else. So how high can this thing go before the next crisis takes hold on the market, pulls prices back in some? Can this thing really give you that much more in gains? I'm not sure it can. Look, some of these software stocks look really stretched. SPLK, cloud stock, hasn't been affected too much by the rotation out of tech in recent days. It's done pretty good, actually. Still near its all-time highs. Again, you got to wait for a pullback on this. If you're going to chase it at 180, man, then why were you not chasing it at 110? So hold off on Splunk, hold off on some of these other cloud names that are just gone straight parabolic. Wait for better prices. I can't even give you a price entry on this one yet. It just needs to pull back. It needs to have some kind of like reversion to the mean. Come back to like the 200-day moving average. Go back into the 130s, the 140s. The 180s is not a place for SPLK at this point in time. We talked about the double top that we saw forming on Microsoft. Now check out the one in SMAR. It's a little bit more pronounced, right? Double top hasn't confirmed it, just like Microsoft hadn't confirmed it. However, it's lurking out there. If it breaks below 50, this thing's going to get ugly. Look, I'm not a hater of SMAR, and I'm not a hater of Microsoft. I've traded both of them this year. I've traded SMAR. I'm happy with it, okay? I've done it with some good results. However, you got to watch this $50 price level. If it breaks, become bearish on it. Maybe even short the stock. All right, let's wrap this up with SHOP. Nice hard pullback to the 20-day moving average, more than 10%. So there's been some profit taking in recent days. Some short-term support, I wouldn't put a lot of faith in it. Again, it's kind of like SMAR or SPLK. These things have run big, right? I don't think 740 is really where you want to be targeting your next buy at on this particular stock. Instead, wait for it to pull back. Be patient. Maybe it never pulls back. Maybe it goes to a bazillion, right? Patience pays in the stock market. For everyone that just keeps going higher, there's a multitude of them that comes back down and gives you the entry price that you want. So you've got to be patient. I would probably wait at least until 600 to even dip my toes back into the water with Shop. Okay, if I can get better, if I can get closer to the mid to lower 500s, fantastic. However, that may be a pipe dream considering how bullish this market's become in recent weeks, and it may just keep on pushing higher to all-time highs, blow through them, right? Good. You're looking at risk and reward. You're not trying to get into stocks simply because you think they can go higher. You're looking to get into stocks because there is a favorable reward to risk ratio, because you can make more money by trading the stock than what you can lose if you're wrong on the stock. And that's what you're wanting to look for. When you take a look at Shop, that's not there. You take a look at Microsoft, there's not a lot of risk, but I don't think there's a lot of reward either. Same thing with Amazon and same thing with Apple probably, right? But then you have some other names like Netflix and AMD, Advanced Micro Devices, stocks that actually have a favorable risk reward ratio and a potential breakout play at hand that you can take advantage of. So tech has been one of the most preferred sectors for many years now. And it's probably going to be that way for many years to come. It's my favorite sector for sure. If I have a good trade setup in tech and I have a good trade setup in industrials, what do you think I'm going to take? I'm going to take tech every time. But in doing so, you've got to make sure that the risk reward is there. If it's not, then you got to pull away. You got to find a better trade setup out there. And there's plenty of trade setups out there. There's trade setups out there every day. Right now, it's kind of difficult because the market's so overbought, so overstretched, but you can still find some here and there. I want to thank you for listening to this video. I encourage you to like and subscribe below. It means a lot, helps me a lot, and I look forward to providing you with a lot more great content in the days, weeks, and years to come. Thank you, and God bless.